Thanks very much for everybody's attention. In short, our value proposition is we are a $35 to $40 million market cap company sitting on a $1.5 billion US NPV PEA, and the lithium industry sitting in what I think arguably is the best mining jurisdiction in the world. We're only going to be able to address a few of these pages, but hopefully they'll tell you the story. What we have is a very large evaporitic or sedimentary deposit situated in Nevada, about 2.5 hours northwest of Las Vegas, in our own hydrological basin. We're not up in Clayton Valley with Albemarle and a bunch of other projects that are there. I think what you're going to find is that Nevada is going to become the centerpiece of the U.S. lithium industry because of projects like this. They're typically referred to as clays, but there's definitely a distinction in the difference, the definition. These are sedimentary deposits, and ours is essentially defined by the fact that we have very small clay-sized particles, as opposed to clays, which means we can liberate the lithium without the use of sulfuric acid, which is very important from an ESG perspective for lithium end users. You haven't heard about this company essentially for the last 2 years because we've been busy assembling both halves of the project. Originally, we had 5%, went to 20, then 50, and then late last summer, we basically acquired the other 50%, and now we're finally in a position to come out and market as 100% owners of it. Mining.com calls us the third largest lithium clay or hard rock deposit globally known. It's 18.3 million tons of lithium carbonate. I would argue it really doesn't matter if you're 1, 2, or 3, because at this point in time, our mining profile, as envisioned in the PEA, only uses a very small percentage of it. It'll be a 30,000 ton operation for 40 years, and obviously I think this is something that we're going to scale up. Reason I think it's important to talk about Nevada at this point in time is because of some very, very optimistic and supportive comments that have been coming out of the governor's office. And recently he was in Toronto asking the Trudeau government how they could help him extract the maximum amount of value from the lithium supply chain. So not just mining, but recycling, batteries, the whole thing. I think, again, because of the expansiveness of these types of projects, you're going to see this become the centerpiece, feeding all the battery projects that are being built, the plants in the U.S. Midwest and in the Southeast and Texas, as well as in Nevada. And obviously, this will all be to the advantage of getting the U.S. Electric vehicle tax credits that have been put into legislation over the course of the past year and a half. At a more localized level, this is Bonnie Claire. Again, 2.5 hours to the northwest of Vegas, right off of the interstate, which is Route 95, anywhere from 2 to 4 lanes, with high-powered lines going right alongside of us. It's an enclosed drainage basin, which is actually bigger than Clayton Valley. So all the sediments that have accumulated here over the millennia have deposited themselves in essentially 2 big blankets. If you think about it as a sandwich that's put on its side, the top piece of bread is lower grade lithium. Then there's a centerpiece where the meat would be, which is sandstone, which does not have lithium. And then you get to the bottom piece of bread on its side, where you have some lithium values that continue to increase now to very, very high levels. In fact, our latest drilling has shown that we're hitting lithium levels that are 2 and 3 times greater than what our overall resource grade is, which is actually 1,000 ppm with a 700 ppm cutoff. We have no endangered species here, no endangered flora or fauna. We have no indigenous tribes that have their reservations adjacent to us, et cetera. We're here by ourselves. The town of Beatty is 30 miles to the southeast. Very, very supportive of the project and understands that it would be a benefit. It was an old mining town in the past. Gold mining is obviously part of Nevada's present as well as its past. And the idea would be to help rehabilitate Beatty through a project like Bonnie Claire. We're in our separate hydrological basin, again, from everybody in Clayton Valley, which I think is going to be a distinction that's going to become more important over time. We're not going to be in direct competition for the water that we'll need. The water in our basin is saline, so it cannot be used for agricultural purposes, which should help us essentially acquire the water rights that we need. We're in the process now of establishing the water balances, the volumes that we'll need, and contacting the landowners. Area 51, which you've all heard about with the aliens, is directly to our east across the road. Death Valley is over the mountain range directly to our west. We are in the middle of nowhere. We are not going to have any NIMBY issues with the development of this project. If you look at the size of the overall footprint, as I tell people, this is 1.25 times the size of Manhattan Island. And we're looking in a very, very small area right now with an area of emphasis in that oval. Obviously, I'm an American. I put it into perspective that I can understand. We're basically in Midtown Manhattan. This is where we're doing our resource upgrade drilling to support the PEA on its way to PFS. However, there's a tremendous amount of other land here that we can look at. And one of the reasons I bring that up is we just recently ran a seismic survey, which indicated that we have the same sort of structure underneath that Clayton Valley has 50 miles to the north, which gives us hope for a brine opportunity. Right now, the technical teams are working on it. It would be a little bit of a different recipe than what's up at Clayton Valley, but the structure, the trends north to south, and arguably it looks like across the entire breadth of Bonnie Claire, would be something supportive for us to continue to look for brine going into the future. This is an additive opportunity. It is not exclusive. It does not mean that we're changing direction, which is to progress with our PEA, which is going to utilize something called borehole mining, which is what Cameco does at Cigar Lake. Essentially allows us to get down to 2,000 feet or greater, inject higher pressure water, create a slurry, and bring it to the surface and put it right into the plant. We will create a battery-grade lithium carbonate at the end of the plant gate. This would not be a concentrate that has to go anywhere and be upgraded. It would go directly to the battery plants in the Midwest. As a matter of fact, we already produced battery-grade battery-grade carbonate at the beginning of last year, and we're now working on battery-grade hydroxide. I hope to be able to announce that successfully over the course of the next few months. The PEA is very robust at very low, I would argue, lithium prices. This was done 2 years ago by Global Resource Engineering, which is in Boulder, Colorado. At $13,400 lithium prices, we get a $1.5 billion US NPV with what I would argue is a very manageable upfront CapEx of $550 million. 30% of that is contingency. This is very, very sensitive to increasing lithium prices. And when we put the news release out, I asked the engineers to put the sensitivity in very, very plain, what I hope to be understandable ways. And when you see at $30,000 lithium, the NPV of this thing is $6 billion. The reason that I think it's important is for people to understand the inflationary pressures that are out there in the mining world are tremendous. But when you have this kind of a cushion predicated just on a rising lithium price, you see that it can help offset a lot of increasing costs, which we know are going to in fact occur. For a second, I'd like to go and just take this to the macro level with regards to lithium prices, because obviously it's creating a lot of consternation. So quickly, let me say this. I've been in basically the institutional buy side for 30 years, investing in companies like these. And one of the things that we always tried to do was get the tailwinds at the commodity level correct. And I will tell you this. If you just go with me for a second and say, arguably last year, lithium production globally was about 500,000 tons of lithium carbonate equivalent. And you're looking at a need in anywhere from 2 to 2.5 to 3 million tons in 2030. The annual growth rate that's necessary to do that is only order of 15 to 20%, and that has never been done at the global level in a commodity. It's just too much stress on the system. So the reason I bring that up is that as we go through these machinations of short-term volatility due to Chinese traders or slowdowns in auto sales, think about the fact that when you're trying to get 500,000 tons a year to 2 million, the stresses on the system are going to be tremendous. It's going to be an upward pressure on prices, and that's going to let us, hopefully, increase shareholder value now with the sensitivity to lithium prices for this sort of a project. So it's not much, but it helps to have people sleep at night. You want to be a long-term investor for a reason in an area like this. We think we have extraordinary value that we're going to unlock for investors. And I ask you to please take a look at Nevada Lithium. Go to our website, nevadalithium.com. Come by the booth. Be very happy to talk to you. Thanks very much.